Major fund manager Perpetual launches a $2.4 billion takeover of one of its major rivals. The Aussie dollar creeps higher and is forecast to keep going, and some weird and wacky outcomes of COVID that no one thought much about. It's Tuesday, the 5th of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, you know how we love hearing from people who listen to Fear and Greed. We also love it.
We mostly love it. Just occasionally we're not so fussed on what they say, but generally, yes, I agree.
Generally, well, those ones we tend not to talk about too much. But I'll mention this one today for obvious reasons, because it's a fantastic review that's been posted on Apple Podcasts, and we do love seeing public reviews on social media or on Apple Podcasts or anywhere. And this person, Calvinized, is their name. I'm guessing that's not their real name, but they say, great podcast, very good to find out what's going on in the world from a business perspective every day. Some great interviews also. And the reason I'm mentioning this one today is because we've got a particularly great interview today, Sean, and I thought this was a fascinating chat that you had with Peter Deans, who's the founder of Not Without Risk Consulting, but he was also the independent expert that was helping the Royal Commission into Crown. So he's got a fascinating kind of insight into what's happening in the gaming sector at the moment.
Yeah, I totally agree. It's a great interview, and Peter comes at it from a governance perspective, and he doesn't pull his punches about what he thinks was going on. It's really interesting insight. You read the media headlines, but that Peter actually can tell you what was going on. It's great.
Yeah, it's a really good one. But anyway, thank you very much, Calvinized, for that review. And
thank you, Calvinized.
Yes, and make sure that you do leave us a 5-star rating on Spotify or Apple Podcasts, and a review is very much appreciated. But Sean, we have to get on with it. And the lead story today is about a very big play in the funds management sector, with Perpetual bidding $2.4 billion for Pendal.
Yes, and that was enough to send Pendal's share price up 18% yesterday. Now, the offer of $6.23 a share is a massive 40% premium to Pendal's closing share price on Friday, but it's still well below where Pendal was 6 months ago. Both companies have been in the market in recent years buying other players, with Perpetual picking up a US fundie, while Pendal purchased European-based J.O. Hambro. Size does matter in the fund management industry, and the biggest want to get bigger. That's what this is about. Perpetual says a deal would make it the clear leader in the local funds management industry.
So what was Pendal's response?
Well, its relatively new Chief Executive Officer, Nick Good, suggested it was an opportunistic offer, given how much Pendal's share price has fallen. The decision, of course, will be made by the board and the chair, Deborah Page, who's only had the job for a couple of months.
And does that matter?
Well, that's kind of an interesting question. Boards and CEOs have to operate with shareholders' interests at heart. So we take that as a given. But new chairs and new CEOs are more likely to want to have a crack at growing the business first to see what they can do, rather than cede control to someone else. So I actually think it does matter that there's a relatively new CEO and a very new chair.
All right. So both of these companies are active fund managers. What exactly does that mean?
Well, they take money, mostly from big super funds, so it's yours and my money, and use their smarts to try and outperform the market. It actually hasn't been a great strategy over the past decade or so, but the fundamental shift from a falling interest rate environment to a rising interest rate environment makes active investing much, much more enticing. More broadly, this is one of the biggest takeover offers of the year so far, following the flood of them last year, of course. With markets just a touch more settled at the moment than earlier in the year, the Perpetual bid could well be a precursor to much more M&A activity, Michael.
Okay, so what happened in the local market yesterday?
The S&P ASX 200 closed up 0.3% to 7,513 points. It's certainly heading back towards its all-time high, which it reached in August last year. Not surprisingly, Pendal was the best performer, while fellow fund manager Magellan Financial jumped 9%. Remember, that's a company that really has been hammered, but when there's money sloshing around to start buying fund managers, that just doesn't help the one that's under attack, it also helps all the others like Magellan as well. The worst performer was the Predator, Perpetual. It fell 6.5%. There actually wasn't a huge amount happening yesterday. The utilities, materials and technology sectors rose by around 1%. The consumer discretionary index fell 0.9%. Among the best were Fortescue Metals, that was up 3%, and Software Group Xero, which was up 2.3%. Aristocrat Leisure was the worst of the large caps, down nearly 3%.
Sean, the Aussie dollar's having a good run.
It sure is. It's trading above 75 US cents and around 5-month highs. Undoubtedly, higher commodity prices helps the local unit. And with iron ore back to around $160 a tonne, buyers need Aussie dollars to pay the likes of BHP, Rio Tinto and Fortescue Metals for the ore. That, of course, creates demand, hence appreciation of the currency. The Financial Review does a quarterly survey of what economists think will happen to the dollar. And the latest, released yesterday, shows that most think the currency is heading higher. Consensus is that it will be between 75 and 80 US cents by Christmas. There's quite a few, I think there's 5, who think it'll be 80 cents or more. That's good if you're travelling overseas, but it also acts as a handbrake on the economy because it makes our exports more expensive to buyers. Imports, of course, though, are cheaper. That's the good news. In global markets, Michael, the oil price has taken a breather with Brent crude around $105 a barrel. The US, Japan and Britain have agreed to provide a strategic release of reserves to combat price rises. And gold is trading just over $1,900 an ounce.
All right, we'll be back in a moment with the rest of the day's business news. Sean, we mentioned it yesterday, the unofficial election campaign is on, and while the coalition is talking itself up, the polls aren't so good for the government.
No, the Financial Review Ipsos poll shows that the coalition is behind 10 points on a two-party preferred basis. The Australian's News poll is about the same. Certainly, there was no budget bounce for the Prime Minister. And in terms of preferred leader, which is where Mr Morrison has always been in front, it's now pretty close between him and Labor's Anthony Albanese.
Speaking of the Prime Minister, he is pushing individual states now to ease isolation rules for COVID-19 close contacts.
Yes, it's inevitable it will happen, but who knows when. Other countries, such as the UK, have pretty much dropped any formal self-isolation rules. It means that if you're a close contact, but you have no symptoms and test negative to the coronavirus, then you're free to go about your business without isolating. Mr Morrison yesterday said it was up to the states to relax the rules. I'm sure he would love that to happen before any election.
Yeah, I'm sure he would. What were the COVID numbers like yesterday?
They're just getting a bit better at the moment. Across the country, there were more than 42,000 infections, while the number of people in hospital is now below 3,000, with just over 100 in intensive care. Unfortunately, 14 people died from the virus in the 24 hours to yesterday morning.
All right. Now, Sean, online sales fell back in February. It seems that the peak of online selling was in October of last year, but since restrictions have ended, people are returning to bricks and mortar.
Yes, you can't believe this story, can you?
No, I'm a bit surprised by this because as an avid online shopper, nothing is going to lure me back into the shops.
Yes. Well, according to the Bureau of Statistics, online shopping was off 4%, but still 23% higher than a year earlier. Interestingly, online food sales have held up pretty well. I mean, who really wants to go to the grocery store if you can avoid it? While non-food sales are actually down quite a bit. No one is suggesting things will go back to pre-COVID norms. Online sales will forever be a much bigger part of total turnover. But Michael, this story got me thinking about some of the stuff from the ABS in recent weeks about the impact of COVID.
Sean, I'm very reluctant to ask you about for more information about something that came from the Bureau of Statistics because you are a bit of a stats nut and you tend to do very deep dives on things, but go on.
Oh, thanks for the invitation. Righto, let me give you some examples. The number of people in custody at almost 41,000 across Australia is at its lowest level in almost 5 years. According to the ABS, all the government restrictions across states and territories impacted on criminal activity. Let me give you another one. The number of people living in capital cities last financial year fell by 26,000, with Melbourne and Brisbane losing most. Regional Australia jumped by 71,000, and before you ask, those numbers include overseas and internal migration as well as births and deaths, so they don't actually have to match. But regional Australia up 71,000, capital cities down 26,000.
All right, I know you have more. Go on.
The number of working days lost from industrial disputes surged during the December quarter last year. That's kind of at the back end of COVID. 57,000 employees were involved in disputes, 4 times the level of the previous quarter, and not far off 69,000 working days were lost. After a pretty quiet COVID period, Michael, the total number of disputes, the number of working days lost, and total employees involved have jumped again. Again, one of those unusual consequences of COVID.
Okay, that one was pretty interesting. So you have earned the right to do one more.
So generous, so generous. And I do have another one. Online learning now accounts for more than half of all learning. I think that's quite incredible. This isn't just studying for a degree or a certificate or diploma. It's also personal interest learning and work-related learning. Now, about 7.8 million people did some type of learning last financial year. And whereas 4 years ago, only 19% was online, now 55% is digital. All this, just another example of how COVID has changed the world, and these things won't revert.
Do you feel better now that you've got all those stats out of your system? It feels like they've been building up in there for a while, and today we just opened the floodgates.
Yeah. Want another one?
No, you've definitely had enough. We're going to move on because I want to talk to you about rare earths. I find this fascinating. You love stats. I love rare earths.
Right.
Taxpayers are going to lend, Sean, around $1 billion to help listed miner Iluka Resources build a rare earths separation facility, which has triggered a 6% jump in its share price.
Yes. Now, for those non-geologists out there, this might not be overly exciting, but it's big, big news. Stay with me, Michael, or you will. I hope the listeners are staying with us.
Oh, I'm with you. I am with you.
Now, rare earths, which ironically aren't particularly rare, are used in all sorts of things, from rechargeable batteries for cars to computers, wind turbines, superconductors, all sorts of things. Separating the rare earths is actually pretty difficult. In fact, currently it has to be done overseas. So, the federal government will lend Iluka $1 billion to build Australia's first ever rare earths separation facility. Now, Iluka is Australia's largest rare earths miner. The facility will be built in Western Australia. Critically, it means Australian miners don't need to rely on Chinese plants to do the separation, which is what happens now. In fact, China is responsible for 80% of separation of global rare earths. The whole supply chain will now be able to occur locally. And Michael, given the geopolitical times we live in, that's really good news. I like this investment.
Now, all this, Sean, comes as the latest data shows that resource and energy exports are forecast to reach a record $425 billion this financial year.
Yep, and that's up about 50% from original expectations, according to the Resources and Energy Quarterly. The boom in commodity prices, of course, is doing all the hard lifting. Great for miners, great for their shareholders. It's actually pretty good for the government's bottom line as well.
Now, Sean, at the start of the show, we talked a bit about the gaming sector and the inquiries continuing into the Star. What's the latest from the inquiry into whether it should maintain its licence in New South Wales?
Well, the group's chief financial officer yesterday said she knew gaming chips were a good way for people to transfer money, but nonetheless, patrons could take them out of the casino because it was too difficult to stop. It came amid revelations that the Star allowed billionaire property developer Philip Dongfang Li to purchase $2.7 billion in chips over 15 years. Evidence tendered suggests Mr. Li would recash or keep some of the chips without playing them, raising all sorts of money laundering concerns.
A few quick stories around for you, Sean. New South Wales Premier Dominic Perrottet was back at work.
Yep, back from parental leave, he announced a $112 million support package for flood-affected communities in the north of the state.
The Victorian Ombudsman says she is investigating claims that the public service is being politicised.
Surely not. In short, she's investigating whether or not the Andrews government stacked the public service with Labor mates. Wonder what the outcome of that one will be.
Yeah, I wonder. The Tasmanian Premier has resigned.
Yes, Peter Goodwin resigned, a surprise to many. He said it was now the right time to move on and attend to other things in his life, primarily his family. He said the state had been his family and now he needed to give more attention to his own family. Mr. Goodwin has been in politics for 2 decades, but only Premier for 26 months, so it is a bit of a surprise.
Yeah, sure is. And our last one in our rapid fire news here, Sean, a key inflation indicator has jumped to its highest level in more than 13 years.
It has. The Melbourne Institute monthly inflation gauge was up 4% last month compared to a year earlier. Taking out all the volatile items, things like petrol prices and food prices, it was a more sanguine 2.5%.
All right, moving on to overseas news, and there have been some horrendous stories, and really horrendous is the only word you can use to describe these, coming out of Ukraine, particularly around the capital city, Kiev.
Yes, Russian troops have withdrawn from the area, leaving behind horrific scenes including signs of torture, people killed at close range, mass graves, and bodies with bound hands, including children. Britain said Vladimir Putin must be held accountable for the war crimes. Now, Russia has denied the accusations and said Kyiv staged footage of the corpses. It called for a United Nations Security Council meeting over the allegations. The European Union has indicated it may introduce more sanctions against Moscow as a result of the atrocities. Very, very sad.
Yeah, it certainly is. All right, one last one for you, Sean. There are new figures that show US CEOs are reaping record rewards.
Yes, they sure are. The median rate of pay for an S&P 500 boss last year was more than $14 million. That's according to ISS Corporate Solutions. Good. But what's more fun, Michael, is looking at those people that get most. Now, the boss of Media Group Discovery made $247 million last year. That's the number one position. But I want to talk about the head of Amazon, Andy Jassy. He earned $213 million. Now, his figure includes stock vesting over the past 10 years, and it was 6,474 times the annual pay of Amazon's median employee. 6,474 times. The irony, at Amazon anyway, is that the figure was released literally on the day its workers in New York voted to form Amazon's first ever trade union. Wow, what great timing.
Oh, the timing is perfect. And you can just imagine the membership of that trade union would have shot up when news leaked.
Anyone unsure of whether to join, they read that and they're in.
Yep, they certainly are. All right, now up next is the Fear and Greed Daily interview. Sean, and we've talked a fair bit about this. It is with Peter Deans, founder of Not Without Risk Consulting and an independent expert to the Royal Commissions into Crown.
Yes, as we mentioned, really well worth a listen. Peter knows his stuff and gives us an insight into what happened at Crown. And also, he's not involved in the Star inquiry at the moment, but his perspective is really interesting on that one too.
Yeah, certainly is, considering there's so many of the same issues throughout the whole sector. And that's one of the first things that you ask him is about kind of why is this happening across the board. So it is a great conversation. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 5th of April, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. Have a go at listening to us as well through your smart speaker. Just say, play the Fear and Greed podcast, and away you go. Don't forget as well, a lot of housekeeping today. Leave us a 5-star rating or a review as well on Apple Podcasts. We love that. I'm Michael Thompson, and that was Fear and Greed. Have a great day.